Talking about taxation at the end of the day is challenging, it's difficult. Talking after Brunello Cucinelli having talked about figures and souls, it's even more difficult. However, this is our topic, and this is the topic I've been asked to address. Global taxation, what does it mean for the CFOs? Well, what I try to do, taking into consideration that we have, this is a panel format, so I'm expecting to receive some questions and make some answers. So I will keep short the presentation. I put some keywords that, in my view, are relevant in the tax space for the CFOs. It is important to say that this is my own list, it's not a PwC list, because if it would be a PwC list, an official one, I would take 2 or 3 hours to comment on, so it's just mine. And these are topics that I think should be in the agenda of CFOs. And in my experience, they are in most of the agendas already. I put exchange of information and data analytics. I put the tax morality debate and tax competition. I put enhanced relationship and tax risk control frameworks. And I put the bring tax to the boardroom and role of CFOs. So in 10 minutes or so, I'll try to address these 4 items and then give some takeaways. Exchange of information and data analytics. I think coming after a speech concerning BEPS is a fantastic way to introduce transparency and disclosure. What is happening is probably we can start and then skip to nowadays time, to the 29, when there was a G20 in London, in which there was a number of statements. One was the bank secrecy is over. Another statement was fight to tax havens. Then a long story started. There was a US FATCA, was a legislation imposing certain reporting requirements to financial intermediaries. Then we moved to BEPS and to country-by-country reporting. Now the sharing of rulings. And then there is in EU, a big topic is coming, the EU, the state aid investigations. If I put together BEPS, country-by-country reporting, if I put the ruling, disclosure of ruling that are expecting to come in force, and state aid, it is clear to me that the world, in terms of transparency and disclosure, is changing, and to a certain extent has already changed. The way in which the tax administrations are linked to each other has changed. There is now an automatic exchange of information. Most of the countries are linked and are ready to have, let's say, big data, which is another aspect that I will touch later on, to share data in a way that may be managed electronically. So it's not the whole world in which someone was asking and someone was answering is over. So I think companies should realize that transparency and disclosure is becoming simply the environment in which they need to work. There is no alternative, and I think this is a trend that is already in place but will not change. So we must be ready to be asked about our intangible policy, our permanent establishment policy, our transfer pricing policy, and so on. And the way in which the discussion will be made in the future is that tax administration will not need simply to ask us and to receive answers, but will have a number of information about us that hopefully the CFOs have. It might be that they don't have. Simply, what I'm expecting is that during a discussion in tax, there will be a piece of paper with a speech of the CEO made somewhere else in the world, saying something relevant for tax that will become a topic of discussion with the tax administration in a local jurisdiction. Data analytics tools. I was arrived just for 2 panels before, so I saw a presentation in which big data was mentioned. The big data impact in tax, in my view, is undervalued. What I'm expecting is that the way in which tax jurisdictions will use big data will increase. It's not the world of now, but it's the world of the future. And probably in 2 or 3 years, I know that in China there are regulations in which companies, the big companies, might allow the tax administrations entering into the system to sort out data. It's something that is expected everywhere. Again, the way in which this world is changed, driven by technology, is the first important topic, in my view, in tax. The second one is a tax morality debate. Is tax something related to morality? The answer probably would be not, or at least until a couple of years probably was not. I simply need to respect the law. That's it. Now is a bit more complicated. What is happening if you go to YouTube or you Google something in relation to public hearings in tax? You see what is happening in a number of countries. UK first, in the public hearings of the big companies like Starbucks or Amazon is really, really interesting for giving some, let's say, flavor of what is expecting a number of companies. What is happening is that we need to be engaged in a discussion around the good citizenship that was not applied to tax before, which means basically that someone can challenge you and your company on which is the fair share of taxes to be paid. It's something very new, but very important to know. Because in the meantime, you see tax morality debate, so you need, as a taxpayer, to pay the right amount of taxes, and the debate is moving to some NGOs, you can say UK Uncut or Tax Justice, and from them is moving to social media. The way in which you move a discussion about tax in a non-technical environment is, in my view, for tax directors and CFOs very dangerous, because the discussion is moving from technical to something which is, let's say, the social view on what this should mean. In the meantime, you have countries and governments that are still competing in tax. In the business environment, countries compete in tax. Means that there are a huge appetite to incentives, a huge appetite from one side to tax entities that are expected to be non-good citizens, and in the meantime to attract local investments. This, let's say, diversion between this tax morality debate and tax competition from one other point of view, which means how to locate investments, is another piece of the keywords, in my view, in tax. I move faster to another one. Enhanced relationship and tax risk control frameworks. Starting in Australia in 21, there are now, I think, 24 cooperative compliance programs around the world. What does it mean? It means that particularly the top players are asked to sign a kind of contract with the tax authorities, under which, if they go certain information in a specific way and they are transparent, they receive certain benefits. In most of the situations, the benefits are an accelerated ruling and the possibility to close the period of assessment much before the other companies. Tax transparency between tax administration and taxpayer is a long journey. What these programs show all in terms of similar features is that it's very complicated. They are, in most of the situations, dealing with a kind of dyslexic approach because at the central level, very good relationship, bloody fight in the ground. So in the meantime, the auditors are fighting and you are discussing very quietly with the center. It's very difficult to manage certain aspects like the past, but I think this is a trend. So the top, so the biggest in size companies around the world will consider and will apply for cooperative compliance program. Part of the cooperative compliance program, you have the tax risk control frameworks. One of the prerequisites to join these programs is to have a structured way in place to manage tax risks. Is the need to have a tax risk control framework simply be driven by the cooperative compliance program? I think not. I think the level of risks in tax imply to a change in the approach to manage tax risks for all the companies and not only the biggest one. So moving fast, I think that as the OECD has stated very clearly, it's not possible anymore to take tax issues segregated into the tax function. Now, what is expected, you see it in the local legislation, you see it as a view of the OECD, you see it when you go into dispute with tax authorities locally, that board of directors is involved, is expected to be involved. And not only when there is an issue, but when there is a need to, let's say, assess the level of controls that the company has over the tax space. As I said, more and more asked to explain and justify the company tax policy, investors, shareholders, and social media. Why tax is an issue of the boardroom? Very simple. Cost of lack in compliance are increasing, and reputation. Reputation is becoming an issue of boards, and tax is becoming a very, very delicate issue in terms of reputation for the reasons I explained before. Takeaways. It is not likely that, in my view, taxation will become global. I don't think we will have a global taxable base, global rates, global incentives, and global sanctions. But I am expecting what is changing the world in under other aspects, like technology and like big data, but like also the approach to tax havens. Global trends do affect tax. So we cannot ignore what is happening out of the tax space. Relationship among taxpayers and tax administration is key. It may become even much tougher, the use of technology, so that the level of information that they have, the influence of social media on policymakers, or softer cooperative compliance programs and tax competition allowing incentives that a number of countries will, let's say, offer to companies for tax arbitrage. In a dynamic environment, risks increase. A more structured approach to manage tax risks is a must. Tax control frameworks is the answer. And lastly, Unfortunately for you, tax is not anymore a matter for tax people only. Thank you very much.
Thank you.